Hey, welcome everybody. My name is Michael Kamo. I'm here with my good buddy Sami Abusaad and James Young because you need a trading plan. Because as the saying goes, if you fail to plan, you plan to fail. So Sammy's going to take you through his entire method for writing a trading plan, and then we are going to talk to you about how Sammy and James can actually become your mentors because a big part of long-term success is having a plan and having mentors. So just let us know in the chat, what is your number one trading goal for the next 12 months? What do you want to accomplish over the next year? And if you're watching on YouTube or Twitter, hit the like button, say hi in the comments. So, of course, these are our guys. They were together in California. So this is kind of funny because James was a student of Sammy's, and now they teach together. So, like about seven or 8 years ago, James was actually in the audience listening. Now he's one of the hosts because he's made so much fast progress as a trader. So again, so stick around because later on we are going to discuss how you can make Sammy and James your mentors. And like I said, 7 years ago, James was attending an event just like this one. Okay, so today, Sammy's going to take you through his trading plan. Then we are going to talk about Sammy and James's mentorship, which can accelerate your progress in a huge way. And of course, you can find out how to make Sammy and James your mentors. Okay, all right. So I think we should just jump in because everybody wants to get to the learning. So we are going to throw Sammy right in the deep end. James might be lifting weights in the background. Don't get distracted. But yeah, so Sammy, you could take it away. I think before you get started, could you talk just a little bit about the current market environment and why people might need to, get their stuff together now?
No matter what the market environment is, we need to have our stuff together, because sooner or later it's just not going to work if you don't have a certain method or approach to trading. If you're just gonna like wing it, it will never ever work. That's a guarantee. Now, if you have a trading plan and you approach it in a very methodical way, it's not a guarantee that it will work, but you're putting the odds in your favor. So that's why you need to have a trading plan. The market is what it is. It seems to be improving. We had a great day in the room today, and even though if you look at the market, it didn't do anything. We shorted TME, STIM. We did a lot of good things. I played Coinbase long. It shot up. I also had a call on it as a swing long, MSTR. So you name it. But that's because I have a trading plan. I know exactly what I'm looking to do, and I put myself in a position to succeed. It doesn't work every single day, but I'm putting myself in a position to succeed. And that only happens through a trading plan. So I have two goals for today. And one of them is I want you to stop making the two major mistakes that are holding you back. And then the other thing is something that I really, truly wished or hoped that somebody would help me with when I was writing my own trading plan. What do I include in it? What do I put in my trading plan? What are the different things that need to be addressed in a trading plan? Nobody told me that. I had to learn it the hard way, and it took me 2 years to complete writing my trading plan, even though I started 4 months 4 months into my trading career. I actually got started on the trading plan, but it took me like a couple years to finish because I didn't have any guidelines. I didn't have any guidance at all. Okay, so the first couple of things are mistakes that are holding you back. Okay, so why most people fail at trading? The tale of Radio Shack. I went full-time April 7th or 8th. I don't remember the exact date of 2007. And the first company and the market hadn't yet fallen apart, but it started in the second half of 2007, and I was like, the first company I wanted to short was Radio Shack, because you could see Radio Shack was charged outrageous prices, They were outdated. There were a couple of stores in the area. I've never driven by a store and saw a single person in the store. I'm like, that's the company I want to short. And when you look at the chart of Radio Shack in 2007, I mean, this thing was a rocket ship, right? Didn't look bearish at all. So the first mistake is people trade their beliefs instead of what they see with their eyes. Okay, they trade their beliefs. I believed Radio Shack had to fail, but the chart was clearly bullish, and yet I thought the stock had to go down. So that was a false belief. Eventually, Radio Shack did go bankrupt, and I went short. That was one of the entries that I took. One of them, the last one. Short at 80 cents, it dropped to I think 59, 58, and then I had to cover it. I covered it right there when it started to like flip, and if I hadn't, just take a look what it did. It tripled off the lows, almost tripled off the lows. So, you know, you always have, no matter what your belief is, you always have to go with reality, what the market is telling, what the message of the market or what the message of the stock is, and act on it, not on your belief. Your preconceived beliefs about what should happen cost you money. That's the reality. Mistake number 2 is traders don't understand their own psychology. You might say, what are you talking about? I'm not trying to do therapy on myself here. Sure, you're not. But you will see in a second why understanding your own psychology, what makes you tick as a trader, is really important. If you think trading is all about, trading, like figuring out what chart patterns to trade, here's 16 of them, 8 bullish, 8 bearish, right? These are the classic patterns that you hear about all the time. Head and shoulders. This is an inverted head and shoulders, basically. Double bottom, whatever, you name it. Here they are. You can Google them. They're a dime a dozen. They're free. They're not a dime a dozen. But should we all trade these patterns? We shouldn't, right? What should you trade? Should you trade based on the Pristine method alone? And I'm not including other methods that are available to you as a trader. You could do gaps, and there's 2-3 types of gaps: professional, novice, in between. You could do climactic plays. There's different types of climactic plays also. You could do breakouts, breakdowns, pullbacks, right? Buy setups, sell setups, continuation patterns, 1, 2, 3 patterns. You could do bull bear trap plays, shakeouts, scalps, late day breakouts. Then you could also do day trading, scalping, swing trading, trading earnings. That's just based on the Pristine method, okay? So you have a whole host of strategies available to you, but which of these should you trade, right? Which of these should make sense to you? This is something that I learned about, not from my therapist. I've actually never done therapy. Maybe I should. After all these years of being a trader, I probably could use some therapy. I learned this concept of trading in a way that suits your own natural personality from this little book. It was not little at all. It was like 400 pages long, called Market Wizards by Jack Schwager. His original book. He wrote other books after that, but the original was the best. And he said in the book, in trading as an archery, if there's effort, force, straining, or struggling, or trying, it's wrong. I'm like, what? He said the best traders in history have only one thing in common, and that they trade in a way that suits their own natural personality. Those were his exact words. I made it a little bit simpler, and I said they play to their individual strengths. Now, if you don't know the story of Jack Schwager, he was actually a struggling trader who he could never get his account to go above 100,000. Now, back in the day, 30 years ago or 40 years ago, 100,000 was a good amount, but still, he was never a super successful trader. So he set out to interview the world's best traders at the time, thinking that they all traded alike. They all did the same thing, right? That's what he thought. And he found out that not two traders traded the same way, but that every trader traded in a way that suited his own natural personality. So that's something that was a surprise to him. And he said that if you do, in trading as an archery, if you're forcing it, if there's straining, struggling, trying, it's wrong. It needs to be something that you naturally, a style that you naturally gravitate towards. Now, of course, that takes us to the next logical question: is how do we find out what we naturally gravitate towards if we don't know anything about trading? Well, in the beginning, you have to experiment, right? You have to record your results. You have to track your thoughts. You have to do all sorts of things, which I'm going to go over with you in this little presentation. So Market Wizards inspired me to explore my personality and match my trading to it. Here's why most people are terrified to make a trading plan. First thing is, things suddenly get real. Once you commit to a plan, you are suddenly accountable for your results. And when things don't go well, we don't want to take responsibility. This is why when I first started tracking my trades, I would track for a week, for 2 weeks straight without missing a single day. And then I would have a bad day and I couldn't get myself to do it. It would take 5 minutes, 10 minutes. I couldn't get myself to do it because it was too painful to actually look at what I did, right? And take responsibility. Nobody likes their nose rubbed in their own face. So your ego gets bruised. But the thing is, that's how we grow, right? That's part of the growth process. If you don't go through it, the only way through is in, right? So if you don't go through it, you will not learn and grow. Now, a plan is required for success. A plan allows you to move forward systematically. You know what's working and you try to do more of it. You know what's not working and you try and eliminate it. That's the only way really to improve, not just in trading, but just about in any business, right? I mean, look at Tesla. They are discontinuing their flagship cars, Model S and Model X. That's what made Tesla Tesla. They're discontinuing. Can you imagine? And they're doing it. Why? Because they are looking at what's working and what isn't, even though those cars hold historical, sentimental value to the company and to shareholders like myself, to customers. They're basically gonna eliminate them completely. Why? Because that's not what's making the money. Okay, so in the next few slides, you're going to actually get the short version of my trading plan. If I were to go over it page by page, it would take a lot longer, but you're going to get like a good amount of it, 50% of it at least. And reason why I'm sharing it with you is because, again, when I was learning how to trade, nobody showed me a template of their trading plan. Whatever sample trading plans I could find on the internet, I could tell even as a 2-month-old trader, right? Or even as a new trader, I could tell they were no good. They were just boilerplate language. They weren't customized. It's just all tedious stuff. That was tedious detail that was put in that wasn't valuable, that wasn't useful during the day on a day-to-day basis. So I'm hoping to, by sharing with you my template, that you would be able to build your own plan. And then in the beginning also, I had a hard time with the thought of, okay, now that I know what I need to include, where do I start? Like, what should I focus on? My advice to you is start anywhere. Just start anywhere. Literally, just wherever you want to start, no problem. Just start there. The most important thing is to start. Don't delay. Because I know what people do, like I did in college. There would be a paper due on the next day, or 2 weeks from now, and I would wait and and work all night the day before I had to turn it in, because I kept blocking it. I kept rationalizing having to do it. So remember, you're going to change your plan based on your experience. So start taking notes. And here is the table of contents for my own trading plan. Okay, so first section is basically goals and objectives, then money and risk management, then the three main strategies, gaps, which is for trading the open, the 15-minute strategy for trading the afternoon, and climactics, usually for late morning, early afternoon. So why did I come up with these three strategies? First, it's something that I liked and made sense to me. But also I thought about how do I organize my day so that I have an effective strategy, a go-to strategy that I can use during every segment of the day. And so I figured, for the open, if I'm going to trade the open, it has to be something that's a gap, right? If I'm going to trade the afternoon, it can't be on a small time frame. It has to be on a large time frame. And so I picked the 15-minute time frame. And then climactics are stocks that go drop like a rock or rally really hard, and I could fade them. So those are the three strategies that I trade. I also do scalps, and that's not a strategy, it's more of a tactic. Then I have a glossary of the terms and all the adjectives that I used in the trading plan. I have psychology notes and technical analysis notes. So here's my section on goals and objectives, right? The ultimate goal is to really find setups that strictly meet my strategies and execute them flawlessly. The objectives are the little goals that I have to reach in order to reach my big goal at the end of the year. I'll show you what I mean. The only things that actually matter in trading that impact the bottom line are these four: the batting average, the Sharpe ratio, the risk to reward, and the number of trades, the frequency of your trades. Okay. Some people have a really high hit rate or batting average. Some people don't have a very high, they're not very good at selecting stocks or patterns, but they're very, very good at management, and they have a very high Sharpe ratio. Okay. Some people can't find a lot of trades, and so they have to make money through their batting average and their Sharpe ratio. Others can find a lot of trades, and so these two ratios don't have to be that high. So you have to decide how you plan to make money. Is it through the batting average, Sharpe ratio, number of trades? Also, the share sizing matters. So here's a table that assumes, just an example of somebody who takes 6 trades a day, risks $500 per trade with a Sharpe ratio of 2.0, which means the average winner is twice as big as the average loser, and a batting average of 60%, which means, they're right 60% of the time. So 6 trades per day at 60% batting average, that means on average he makes money on 3.6 out of the 6 trades, and then loses on 2.4. Per trade, he makes twice as much as he loses. So that means, 2 R's, that's risk unit. So 2 times 500, that's 1,000 on average. And then he loses, half of that, which is 1 R or 1 risk unit, which is 500. So 3.6 times 2 gives us 7.2 R's. And then the losses minus 2.4, you get a subtotal of 4.8 per day, or in terms of dollars times 500, that's 2,400 for the week, 12,000 for the month, 48,000 for the year, over $500,000. On what? On these simple little ratios. 60% batting average. Everybody thinks that they need a 90% batting average. Not only is it impossible, just about, I have a way, you can make it happen if you want, but those other ratios won't be good. Not only is it practically impossible, but you don't need it. You can make money, really good money, with 50% batting average. You can make really good money with a 2.0 Sharpe ratio, right? And a $500 risk, not 5,000. Okay? So let's change it up and see what happens to the bottom line. If, let's say, the risk goes up by 1,000, from 500 to 1,000. Well, it has a one-to-one impact on the bottom line. So you double the risk, the gain for the year goes up by also double, by 2x. Okay. Let's say we go from 6 trades per day to 4 trades per day. So we go down by a third. The bottom line also goes down by a third. So it has a linear impact on the bottom line. So the number of trades and the risk size, risk per trade, has, again, linear impact on the bottom line. If we look at the Sharpe ratio, it goes from 2.0 to 1.5. So that's a quarter, drops by a quarter. Take a look. We go from 576 to 360 to 360. I mean, not half, but a huge amount, right? Drop. It has an exponential, basically, impact on the bottom line. And that's, somebody that goes from, just from 2.0 to 1.5. Doesn't sound like a huge deal. It is. Same with the batting average. We go from 60% to 50%. That's just 10%, right? 360,000 from 570 or 576. Huge impact. So the difference between 50% to 60% batting average is huge. Difference between 60% and 70%, almost just as huge. So those numbers matter, and those are the only 4 things that really matter in trading. So focus on them and figure out which of these, maybe a combination, is going to be your P&L driver. What's going to make you the money? Okay? List your goals and objectives and keep it simple to start. All right? Now, money and risk management, I have a way of protecting gains. If I'm in a position and it's up 2 Rs, 2 risk units, then I have to go break even. So, and if I'm up 5 Rs on the play, it's up, 2,500, then I have to protect. What if it keeps going, right? I don't want to just take it. I have to protect a minimum of 3 Rs. So I'm always trailing by 2 Rs maximum. Now, for closed positions, realized gains, let's say I'm up 5 Rs. Am I allowed to go negative on the day after that, after being up 5 Rs, which is, kind of my goal for the day? So no, I want to protect 80% of it, or 4 Rs. But I don't want to stop trading once I reach my goal, because if I reach my goal and I stop, that's going to prevent me from having a $10,000 day, a $20,000 day. So that's why I just trail my realized gains. I also have rules for open exposure and maximum loss for day and week, and what to do if either of these are reached. So we don't have time to go over every single detail in my trading plan, but I'm giving you kind of a framework, the outline, and more than the outline for my trading plan. Your action step: create money and risk management rules that you are comfortable with, that make sense to you. Then I have a section for every strategy, right? A way to write a strategy. And I have 4 sections or 4 things that I address in every strategy. So the must-haves, the can't-haves, the would like to have, and the trade metrics. The must-haves list the pattern requirements, and that's like more or less a copy and paste from the manual, from the the TPM class, the pattern requirements, and then anything additional that I want, right? I put it in here. And then the market requirements. Those are the things that I absolutely have to have before taking the play. And then I have a section on the can't-haves for the stock and for the market. Similarly, I have a section on the would like to have. This is the icing on the cake. It's not mandatory to have it. The would like to have for the stock and for the market. And then at the bottom there, I basically spell out the entry, the stop, the target, and the management for this strategy. I have 3 strategies, so I have 3 different strategies outlined in my trading plan. Now, you might say, well, that's a lot of information. How am I going to memorize this or remember this in the heat of the battle during the trading day? How am I going to remember it? You don't need to remember it. It will come to you. You will, once you actually work on this and fill it out and figure out what it is you're supposed to look for, and you go back to it and edit it and change it, and and then you take some more trades, and then you you make more changes to it, it will become second nature to you. I don't need to look at my trading plan. Once I finished my trading plan, once I was finally satisfied with it, I stopped looking at it, because what was important was the process that I went through mentally to write it. And once I finished it, it became almost second nature to me. So I don't need to remember these things. I know them. I know immediately when I'm looking at a chart whether it's something that is within my trading plan or not, or outside my trading plan. So, but the process you go through by writing a trading plan is unbelievably important. Okay? So your action step is list the criteria for every strategy you want to trade. I have a daily reminders, and I have some general principles and maybe more specific principles. These I actually got from Mark Douglas, who wrote a couple of books on trading, one of which was amazing, called Trading in the Zone. Right? These are just kind of some daily reminders that I used to read. Every morning I would play a slideshow of my trading plan. I did it in PowerPoint, so I could do a slideshow of my trading plan before the open, and then after the close when I'm editing it. So those were things that I liked a lot. Some tactical principles. Here's one of the 5, right? The market's biggest moves ignite from its smallest bars. In other words, explosive moves almost always originate from narrow range bars, and a cluster of small bars signifies the calm before the storm. So this is something like, a car making a U-turn. It has to slow down before it makes the turn. Well, it's the same with stocks. Before stock can make the turn up or down, usually you will see narrow range bars, and at least one, but sometimes multiple. So that's where that rule came from. So it's something that I want to be reminded of. And in the beginning, you wanna be looking at your trading plan on a daily basis, multiple times a day. In fact, sometimes in the morning, during the trading day if you're working on it, or after the close when you're doing your tracking and review. Set your general trading principles and your strategy specific rules. You now have a solid outline. When in doubt, keep it simple, and be conservative, and just start. Just actually get started on it. Now, how does a trading plan actually make money for you? Well, here's how it makes money. It's called the pair strategy. First, you write out, what you want to do. You spell it out. I know you think you know what you want to do, but once you start actually writing it down and you start describing it in detail, you will realize how little you actually really, really know. Because that, to me, that was the surprise. That was something that really took me by surprise. I thought I knew what the patterns were, like I knew everything about the patterns, and when I started to describe them to in language that a 10-year-old child could understand, I couldn't do it. I could write like a sentence or two, and that's it. For example, a pullback, a pullback pattern. So a stock goes up and then gives you a pullback. We call that a buy setup pattern in the Pristine method. Sounds simple. Stock goes up, then pulls back. It's not so simple, because, okay, you have to discuss the move up. Was it gradual? How strong was it? Was it climactic? Then you have to describe the pullback. How clean was it? How deep was it? What's the angle? Did it land on support? Is it at the moving average? So you have, how many bars did it put in? What kind of bars did it put in? You see what I mean? So what do the multiple time frames look like? It may look pretty good on one time frame, but how does it look across the multiple time frames? So, when you start to get into it, you'll realize that there's so much that goes into it, which is why most people don't really make it. They think prices can go up or down, long or short, two directions. It's really easy. And it is, which is why you can get lucky initially. You take 10 trades or whatever, and you get lucky, as it happened to me, right? In the beginning, I took a $16,000 account to $50,000 in under a year. I believe it was in 6 months, and all by luck, because I was swing trading in a really bullish market just after the market bottomed in 2003. I started, I think, in 2004 part-time. The first 2 years were part-time, first couple of years. And the market was bullish, and I was swing trading, holding for a couple of weeks at a time, 3-4 weeks sometimes, and then 16,000 to almost 50 in under a year. And that was all by luck. When the market turned, that's when I realized that I had gotten lucky, because I gave everything back. So first, you write in detail exactly how you're going to make money, how you plan to approach the market on a daily basis. Then you take a batch of trades, 10, 20, depending on how active you are. The more active you are, the bigger the sample size has to be. So you take a batch of trades, you put on a batch of trades, you execute them, and then you look at the result. You analyze it, you figure out what's working and what isn't, you make changes, and you adjust your trading plan. And then you put on another batch of trades. That's how the plan works. And if you do it consistently, I don't want to say there's no way you're not going to make money, but I do want to say that there's no way you're not going to improve. How can you not improve if you follow this simple strategy of putting on a batch of trades, follow your trading plan as closely as possible, then you analyze the batch of trades that you took, make adjustments, make changes to your trading plan, and then put on another set of trades. And then you keep doing it. There's no way you're not going to make improvement. So, go ahead. In the beginning, the goal is to experiment, to figure out what style suits your personality. So go ahead and try out the different trades. And in order to try out different trades without feeling emotional, you have to do it with small size. You can't be risking a lot. So in the beginning, making money shouldn't be your goal at all, because you're just trying to learn about yourself. You're trying to figure out what works, what doesn't. And so to allow yourself, to give yourself permission to lose, you have to lose very, very little, or paper trade. But paper trading is not very good. So I recommend doing even maybe 1 share per trade. Doesn't matter. Very, very small. So there are many ways to succeed in trading. You just have to find your path, which is true. This is where unsuccessful strategies go, right? And my final piece of advice is just do it. You just have to get started. Of course, you might think, well, can't someone else just do it? No, you have to do it. I can't do it for you. I can only teach you the stuff, but you have to push the button. It's not easy, but if you are serious about trading, you just have to do it. Try not to make the perfect trading plan in the beginning. That's an illusion. There's no such thing. Just get started somewhere, a place that makes sense to you. Keep it simple, have conservative goals and trading rules. And then, just as importantly, measure your results, keep the good, and eliminate the bad, and repeat the process, and keep making changes to your trading plan. If you become one of my students, I would be happy to look at your trading plan and go over it with you in detail in the classroom. So I'm there to help you, but I have to say that offers out to all my students. I don't think I've done it to more than like 50 over the years. Why? Because a lot of people don't get around to doing it. They say, I'll get to it. I'm too busy. And they never really complete a trading plan that they're proud of, that they are willing to share with me. So if you want to be different, then as Nike would say, just do it. Mike?
Okay, thank you, Sami. So, what did everybody think of Sami's lesson? Type down in the chat. Let us know what you thought of Sami's lesson. We got a comment about James. James, you're the man. I enjoy listening and watching your YouTube channel, with YouTube in all caps, so you know he's serious. So yes. So what did you guys think? But before we get into all the mentorship stuff, like very quickly, like Sami, how did you figure out like what trading style worked for you personally?
So this was, so once I heard that, or once I read it in the book, that I have to trade in a way that suits me, well, the first thing is the Pristine method made sense to me. I was scouring the internet for looking for trading resources, different methodologies. The Pristine method was the only method that I couldn't poke holes in. That no matter what angle I looked at it, it made sense. So I told myself, this is the only methodology where the logic is intrinsically valid. Like it just made sense. So I adopted it wholeheartedly. But then how did I figure out what strategies to focus on? Because as I said earlier in the presentation, that the Pristine method is, you can do a lot of strategies and still be within the Pristine method. So I started to just basically, I did a lot of journaling, and I said, if I'm going to trade the open, what strategies can I do at the open? And it occurred to me that I can only do really gaps at the open. And then I said, okay, what else is there? What else can I do? And then it occurred to me that there's strong stocks and weak stocks. And so I want to focus on buying the strong stocks and shorting the weak stocks. But what time frame? Do I do it on the 1 minute, the 2 minute, the 5, the 15, the hourly? I don't want to be trading every single time frame. It's too much. So I focus on the 15 because in the morning I'm focusing on the smaller time frames when I'm trading the gaps. In the later part of the day, I didn't want to be trading the smaller time frame because it gets too whippy. So then my 15-minute strategy, the second strategy, was born. And then I said, what else is there other than strong stocks or stocks that are showing relative strength to the market and relative weakness to the market? I said, what else is there? And it occurred to me that there's stocks that go climactic, that go on their own, that are on their own page. They're so bullish, they go vertical. Well, that's not sustainable. You can actually look to fade them. And that's how the third strategy was born. So that's how I focus on the three strategies. But the reason why I went with the Pristine method is because it was truly the only methodology that made sense, that was rational, logical, objective. Use any word you want. It wasn't, well, you just buy at this moving average because stocks usually bounce off of that moving average. Or, when the stock goes above this channel, you short. But why? Nobody could give me an explanation for every question that I asked except the Pristine method. And so that's why it made sense to me, and I went with it.
Okay, so James, same question for you. So how did you figure out which style works for your personality?
So as you saw Sammy explain, like there's many different strategies that we teach and do. And we approach the market in a lot of different angles. And I think for me, it was trying it all and then zoning in on what works for me. So if I were to give an example, like let's say like a basketball player, we were talking sports on our downtime. There's many ways to score a basket, 3-pointer, free throw, could dunk it, post up moves. You can do all these things, but as a basketball player, you're going to focus on what your strengths are. So, like what Shaq was doing isn't what Steph Curry is doing today. They all know how the game works, they all know how to score points, but they're at the end of the day, they're going to focus on their own strengths. So, for me, it was really just finding that or fine tuning it where I am trying everything and I know how to do everything and I can apply those strategies in different market environments, but focusing on the things that I'm confident in doing and that fits my own style, right?
Okay, all right. So guys, so do me a favor. So type yes if you want to make Sami and James your mentors. And part of that is learning what trading style works for you. And even within that style, like which specific strategies make sense for you. So type yes if that's something you're interested in. Okay, because I know you guys watch movies. Every great journey begins with a mentorship. If you know what the hero's journey is, the hero always has a mentor. Of course, we've all seen Star Wars, we've seen the Karate Kid, we've seen the Matrix, but the most important one to me is Rocky, because On this screen, Sami is Rocky. And one of the most interesting things I've ever seen in this industry is then we go to Creed. And so James is Michael B. Jordan. Congratulations on his Oscar. Because, again, this is like the most interesting thing was James was a student in the mentorship 7 years ago, and now he's teaching it alongside Sami. So, like, Sami, so when you saw James, what made you think this guy has big potential? Because James went from like 0 to 100 miles an hour right away and became a moderator in the trading room, like very, very fast. And we never see that. So very quickly, like, what did you see in James that you said, he's a prodigy?
I'm sorry to say it. I don't know exactly, but I could just tell this guy has it. He's got it. I could just tell based on the plays that he put out, based on the questions he asked, based on the dedication, the time he was putting in. I could just tell this guy has it. And so that's what made me reach out to him so soon after becoming a student of mine, which never also happened before. So yeah, it was. I could just tell. When you've been doing something for a long time, when you're expert at what you do, you can just tell. You can tell somebody's got it or not. And so I could tell right away that James really did have it.
Okay. All right. Okay. So we're introducing you to the Pristine Mentorship, which runs from April to May 2026. So it starts in 34 days, if my math is correct. So we designed this to be the biggest and best trader transformation program in the industry. We've been running these mentorships for a long time, but they've gotten bigger and better over time. And it's limited to 30 students. There's only 8 spots left. They've gone very quickly. So again, if you're interested, make sure you stay for the rest of this presentation. We're going to be on for like another 25 or 30 minutes. So make sure you stay on because the spots are probably going to be gone by Friday. So if you're interested, make sure you stay on. So the most important thing is that this is not just another boring online class on the weekend from somebody that can't deliver in the real world. Now, for example, I'm not a professional trader, but I guarantee you I could fake my way through a course on the weekend and you would not know the difference. There's no way you would know the difference. The difference is these guys will trade in front of your face and share their ideas in real time. And that is what all the difference is. So like what you need to succeed, basically you need a system, community, and again, mentorship. You need to learn from people that have been through exactly what you've been through, that know what it's like to be a beginner, that know what it's like to struggle, that know all the ups and downs through all these different kinds of markets. And you're going to go from confused to confident, inconsistent to consistent, and frustrated to happy, which to me is the most important thing because I feel like so many people complain about the market, how everything's always a pain and it's so difficult. And like, why do it? You could go buy a boat and lose a bunch of money and, at least you get to party and have some fun on the water. So like, I think trading should make you happy and satisfied at the end of the day. I mean, that's the most important thing. So it's streaming online so you can join from anywhere in the world and all the training is recorded for repeat viewing. So I'm not going to go through every single detail, but phase 1 is the weekend of April 18th and 19th. So this is where it starts with the Trading the Pristine Method course. So if you're a beginner, this is the foundation. And then Sami teaches Opening Rush on the 19th, which is the GAPS course. And of course, recordings are included. Then the next week, you join Sami and James in the trading room. So you get the live ideas right away. So again, this is not just a weekend class. You get to see what they do in real time. Plus, there's live intraday lessons all that week on everything from gaps to scanning, level 2, market timing, and all recordings are included. Then there's 5 group coaching sessions, which people used to ask for like crazy. We've recently added these, so you can ask anything you want. And again, everything is recorded. Then for a year, you get a year of the trading room, you get a year of Sami's swing trading newsletter, and you get 2 more courses. So your development actually goes on for an entire year. So we don't know any program that offers all of this first, it's learning the system from two pros, using it alongside them, and then live ideas and guidance for a year. Because we've looked at a million education programs in this industry, and there's tons of mentorships that don't include live trading, which seems absolutely insane. Like, could you imagine like learning to trade, but then not actually see the teacher trade? It's bizarre. And, well, here's a nice comment from Adam. I was in the previous mentorship, 100% well worth the money. Sami and James are great mentors and won't leave you hanging. You end up trading side by side with them. Adam, thank you very much. We absolutely appreciate that comment. So this is for experienced traders that want to improve and new traders that want an end-to-end system. So you can be a total newbie if you are serious. So the recent classes, we've had students from 21 countries across 5 continents. I would love to get to 7 continents one day. But yeah, people stream from all over the world. There's people from Australia that are doing it like in the middle of the night, which is wild to me. But yeah, there are people from everywhere streaming online, watching it. So why now? The simplest answer is the clock is ticking. And the sooner you learn, the sooner you have potential to actually make money. And you don't want to go another year, decade, where you don't hit your goal. So like, what is your goal? 10K a month, 500K a year, whatever, $100 a day? Like, what is it worth to you to potentially make that money sooner? That's what it's really about. So again, you learn the system, you get feedback, and you get guidance for an entire year. So I have to show the testimonials disclosure on the screen just to make sure our legal department is happy. And I'm going to play videos from 2 real mentorship students. This is going to take about 90 seconds, but this says it all.
Definitely, I already made back the mentorship tuition plus more. It was about a couple weeks ago, we made a decision that because of the success of the day trading, my wife no longer has to work anymore. I could actually retire my wife now. She works as a nurse, and now she's officially retired, and she's a stay-home mom with our kids. So I mean, our lives has already changed for the better because of James and Sami. All thanks to them. I was actually that one guy in the class that just kept asking questions, and they didn't mind at all. They answered all my questions with no problem. And even after the mentorship, you're in the trading room with them every day. You ask them a question, they're willing to answer.
I think I just got better structure. I had a better game plan, where to enter, where to exit, how to short sale, and how to take part profits, and how to trail and things like that. Just being a professional as opposed to someone who's kind of really a novice and just sort of like winging it. For me, what was really important is being with Sami and James in the room, because you really get to apply what you learn in the mentorship. The mentorship is important to be able to converse with people in the room and be able to understand the concepts that James and Sami are teaching. What Sami is really good at is defining, being very specific about the entries and the exits. That was really important.
Okay, and these are some more messages from students. So this message from Micah on the screen, he was just in the video. So he left his job, moved back to Honolulu, and trades full-time from Hawaii, which sounds unbelievable. I'm in New York, and it's absolutely miserable. I'd give anything to be in Hawaii. Ken from Texas says he's sharing the money-making strategy that he himself relies upon. AJ from North Carolina says, I was so motivated when I came to know that James attended Sami's mentorship, seeing where he is now. I felt I could also reach his level. Brian from Seattle said, I covered the entire cost of the mentorship from one trade idea I got from Sami. Malede from New York says they are great at teaching and have the patience. Like Christopher said before, he was the guy asking millions of questions. So yeah, they will answer everything you have to ask. Dennis from Australia said James shows a passion to see the students get started in their own trading careers. Ben from Canada said, following the mentorship, the gains became more noticeable. Ren from Virginia said, it can change your life as it has mine. James from Texas says, I made back what I paid for the mentorship and more during the week. Jason from California said, I was green every day I was there. He also said I was able to ask Sami the most elaborate questions and he would take the time to answer. Phil from New York said, my account was up nearly 20% in the 5 days of the mentorship. And I'm going through these quickly, otherwise we'll be here like all night. And I know you guys want to, it's St. Patrick's Day. Everybody wants to go out and have beer. So I'm just kind of blazing through these. Collins from India, who was the first person to ever stream it online, said it was the experience of a lifetime. I watched all the way from India via live video streaming. Sami is phenomenal. One person who's attended multiple mentorships says, I learned a lot and was surprised at all the small, important details. Sami is a fantastic teacher. And yeah, just a reminder to anybody who's listening, who's taken a previous mentorship, you can take it again. We've had a lot of people do it multiple times. Marlene from Illinois said, I learned so much that I did not want the experience to end. Newell from Florida said, Sami's collection of material would take years to find any other way. And Zolti from California says, outstanding experience, way beyond my expectations. So you get all the stuff you see on the screen. I'm losing my voice. I'm not going to read it out loud. You see the numbers, 5995, 2499, et cetera, et cetera. Total value, $12,769. But if you sign up by Friday, your price is $54.95, just $54.95. You save over $7,000. If you go to t3live.com/mentor, again, it's limited to 30 students and 8 spots are left. And you can contact my friend Amber for an added free bonus. Amber at t3live.com. Amber at t3live.com for an added free bonus. And she will answer every question. So she's walked thousands of students through educational programs, including this mentorship. So she can let you know if this works for you or if it doesn't, because this is definitely not for everybody. So again, you can go to t3live.com/mentor, t3live.com/mentor. And again, you can contact Amber at t3live.com if you have any questions. Okay. All right. So guys, if you have questions, put them down in the chat below. I have our guys for a little more time. Okay. So we're going to start with Mac, who says the right stocks to trade start with a set of stocks. How do you select a screening setup, your screening criteria for a newbie? So I'm going to actually ask this to both of you guys. Do you teach your screening methodology? Do you show people actually how to screen through and find stocks?
I certainly do. We do. We both do. We screen for the day trades, and most of them are going to be stocks that are gapping on the day. And we screen for swing trades, and I go through the screening process, how to set it up. So we certainly do that through the mentorship.
Yeah, and I know, like Sami once he did a video where he showed how he screens something like 1,600 charts in 12 minutes or something. Okay,
He's probably screening right now, right?
Oh, I know he is. That's the funniest thing is, like, I don't think I've ever had a conversation with Sami where he wasn't like trading in the background. I would love to get Sami's view because I bet you there's like 2 like 4K monitors right in front of him with charts, and I know he's screening right now. That's so funny that you brought that up. Okay, so Sami, do you only trade stocks?
I do. I don't trade options or futures because once I found something that I really liked and that made sense to me, I never went outside of it. So I never really had the interest nor the inclination to trade anything but equities.
Okay, and James, how about you? Same question. So are you just stocks or do you trade anything else?
I do options as well. So I pair them up together. But with options, I'm mostly swing trading. And then for day trades, I'm strictly equities.
Okay, all right. So on this question of trading plans, like, so why do you guys think so few people like take you up on the opportunity to review the trading plan? I mean, you know, James was talking about basketball before. Like, if Steph Curry could critique your shooting form, you would probably want to do that, right?
Unless you're really embarrassed about it.
Do you think? I mean, do you think that's what it is? Do you think people are embarrassed by their trading plans?
Yes, by the effort they put in, by the product that they're about to show me. If somebody told me Steph Curry could help you, I would be a little bit like, oh, I wish I done some more practice first before I show him my shot, my form. So yeah, that's probably the main reason, honestly.
And it's a lot of work. That trading, putting together that trading plan, it is a lot of work. So
Okay, so are you like how often do you guys actually revise your trading plans? Like this deep in your career, or is it just like all mental? You have it implanted in your brains
I
now.
don't need it anymore. I just needed it the first couple of years. Once I was done writing it, and finally I have a product that I was proud of, that I was happy to share with others, I realized I didn't need it anymore because it's all in here now, basically.
And you
yeah,
think that
it's like
that's
driving. But I mean, if you think about driving, the first time you drove, you're kind of like, oh, I gotta fix these mirrors. I gotta put the key in the ignition. I gotta mess with the stick and then the gas. But now it's just like you're eating a bagel. You're on Instagram, putting on makeup, and you're just doing that in the background, right?
Well, I don't do makeup while I'm driving, but yes, the other things I do.
Yeah.
all right, all right. And guys, make sure you go to t3live.com/mentor, t3live.com/mentor, and also you can contact Amber at t3live.com for an added free bonus. So do you guys have any more? I'm going to give one more call for questions. Does anybody have any more questions? All right, I'm gonna here's a fun question. So, Sami, in 30 seconds, what is the Pristine method?
The Pristine method is an objective way to analyze and review charts and predict and be able to, based on the laws of psychology of the traders behind the charts that are trading those stocks, be able to predict the next most likely event, what the stock is most likely to do. So it's an objective way to read and analyze charts and be able to predict what they're most likely to do. That's it, in a few words.
Okay, so you think so the psychology of the market is in the charts?
Yes, everything is in the chart. It's just a matter of interpreting it, and sometimes it's hard to interpret it because it's just really sloppy. That's when you move on to the next idea. You say, this one is just like, I can't read it. It's just not possible for me to interpret it. But group psychology is usually easy to interpret because it's just like, group psychology is easy to interpret. That's just all there is to it. A single person psychology and individual psychology is hard to interpret. So thin and illiquid stocks are actually harder to interpret if there's not a lot of people involved. But if the stock is moving and it's not that hard to interpret most of the time. But most of the time, I know enough to stay away also. So I can interpret it and read it, but that doesn't mean I want to get involved. You see what I mean?
Yeah.
So
Okay.
it helps you eliminate the bad stuff too.
Okay. Here's a great question because I think this is directly related. So Brian's asking, does current events affect your trading decisions at all? Like right now, there's the Iran war, which is like oil went up 35% last week, and stocks are like no big deal. So, are you guys looking at news or headlines or anything like that?
Not really, but if you see, if you see USO or oil is very wild and jumpy, do you want to be a part of that? Do you want to participate? If not, then you don't have to. So I don't need to read the news about it and try to analyze and what Trump is going to do, what Iran might do, whatever. No, I don't need to actually read the news or watch the news. I can see it in the chart that it's wild and it's all over the place. Okay, do I want to get involved? Do I not want to get involved? So that's the question that I have to answer for myself.
James, how about you? Are you obsessing over headlines, or are you just tuning them out?
I mean, if the headlines is just for entertainment, right? Like Sami said, everything is already in the price that I can see. So it's all about supply and demand for us. So it doesn't matter what the symbol is, doesn't matter what the company does or what it is. As long as I can see and read supply and demand, which is what the Pristine method is, just have this in a very objective approach, because all I care about is, are people buying or are people selling? That's it. Everything else is just kind of entertainment. I always like to use like a doctor, like if a patient were to get shot, I mean, doesn't matter, it's a bullet wound. They're going to treat that bullet wound the same way, whether it was from a gangbang shooting or like an accident. Doesn't matter what the news was about why that person got shot. That bullet wound is a bullet wound and will be treated the same way. That is kind of what the Pristine method is. So I'll tell you this, like if you look at or if you learn the Pristine method, you won't look at trading the same way ever again. Like it's hard to look at or like approach it in a any other different way than the Pristine method.
Okay.
Agreed.
And okay, Sammy. All right. So Amber's telling me one more spot was taken, so there are now 7 spots left. So again, if you're interested in joining, jump on it sooner rather than later, because spots are going fast. You can go to t3live.com/mentor and you can contact Amber at t3live.com for an added free bonus. And I highly recommend you get in touch with her first, because if you have any questions, she can clarify everything for you. Again, she's walked thousands of traders through educational programs. So absolutely get in touch with her first. Okay. All right. So final question. So Sammy, is with the Pristine method, is Bitcoin any different from any old stock or whatever other thing out there?
No, it just doesn't gap. It trades 24/7. That's the other thing that I trade. I trade stocks and crypto, but that I don't trade anything else. So yeah, it's not any different at all than a regular stock, except it trades round the clock. It doesn't stop trading, but it's not different at all. I can read the chart exactly this. I read the crypto charts exactly the same way I do stocks, exact same way.
Okay. All right. Okay. I think that's a good note to close on. Sammy and James, I really appreciate you coming out and talking to us about trading plans and mentorships and all this good stuff. And to everybody in the audience, we will email the replay out to you tonight. And Amber will also get in touch with you if you're interested in signing up for the mentorship. Again, if you're interested, get in touch sooner rather than later, because there are just 7 spots left now. And odds are they're going to be gone by Friday. So again, everybody, thank you for joining us. We really appreciate it. Yep, Sammy and James are the best. Great conversation and insight. Thanks, guys. Yes, love these guys. Everybody, go drink your beer. Have a wonderful night.
Thank you, everyone.
Guys.